really returning to normalcy here, despite the 21.5 million people collecting unemployment benefits? Is this the fabled V-shaped recovery that so many people were hoping for? Well, that's what the market's saying. Even as the average didn't do much, say Dow inching up 12 points, declining, S&P declining 0.34%, NASDAQ losing 0.69%. See, that's the problem. I think we're looking at a V-shaped recovery, but it's a V-shaped recovery in the stock market. And that has almost nothing to do with the V-shaped recovery in the economy. Prosper, live. When you look at the NASDAQ 100, the tech-heavy index that briefly hit an all-time high today, it sure doesn't seem indicative of the broader jobs picture. And most of the moves that were responsible for whatever gains we had were from airlines and hotels and casinos, all of which I put in the so-called less bad category, less bad than we thought, a trend that can last a few more days before it does peter out. And people do a lot of fast gaming of it, but it does peter out. It's kind of musical chairs. How can the market rebound without the economy? Because the market doesn't represent the economy. It represents the future of big business. The bigger the business, the more it moves the major averages. And that matters because this is the first recession where big business, along, of course, with bigger wealth, but that's not really my show, is coming through virtually unscathed, if not going for the gold. Small business, the ones that aren't publicly traded, they're dropping like flies after a government-mandated shutdown because they're non-essential. The people who work there are non-essential. It's hard enough to run a small business. How about when the government says you're closed and the landlord says, I don't care? That's the thing about this pandemic. It's been one of the greatest wealth transfers in history, and it's a wealth transfer that was mandated by the state. I think that it'll have a horrible effect on our country, but we've barely begun to see the impact. Still, we just got some figures from the American Bankruptcy Institute that will chill both Republican and Democrat. That's right. Today's numbers show a 48% jump in Chapter 11 bankruptcy filings. That's that pesky real world asserting itself, but the only big bankruptcy that we've seen in the stock market is Hertz. Now, I'm not trying to blame the government for this. The Treasury Department is practically shoveling money at small and mid-sized businesses. They can't find enough of them. There's still $186 billion left in the Paycheck Protection Program. The companies that took the money just got a big break. They only need to spend 60% on their employees to get the loans forgiven, down from the original 75%. That's important as most small businesses fail because they can't afford to pay the rent. They can cut back on labor. They can skimp on the product. They can figure out ways to work more efficiently. But they can't lower the darn rent. And from what we can tell, there hasn't been much forbearance from the major landlords. But in the end, the stimulus package probably won't be enough for one simple reason. And it's an odd one that's not talked about enough. It's not going to work because of social distancing. Social distancing has become the real bane of small business and a boon to the larger ones. Again, while that's not really anybody's fault, it's producing some terrible outcomes.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.